It's Wednesday. That means it's DeFi day. Let's take a look at some DeFi charts. Going to start with the DeFi perp, which, like most of the charts I'm about to show you, are in a trend limbo. The DeFi perps in a range in the VPVR levels where all the volume has been since February. It's at that point of control, as it's called. It's currently in the cloud above the 200. Not a clean bearish or bullish anything. Definitely more neutral than bullish or bearish. Now, what you don't want to see going into Q4 is a break below the cloud, a break below the 200, a break below the range, a break below the VPVR. You could say the same exact thing for every single chart I'm about to show, as it's leaning more and more bearish by the day. Doesn't mean it's currently bearish, but you don't want to see successive lower lows. That's just it, bottom line. What I will point out on a lot of these is the potential for a bull div on any lower lows. Maybe not so much on the DeFi perp, which is an index, but on a lot of these individual charts, bull div is possible. Something that doesn't really look like anything else is DYDX on the 30-minute. So the token got dropped early September to non-US users and recently took off on some China news that China was telling exchanges they couldn't offer crypto trading anymore. Huobi, OKEx, Binance. So the perpetual futures product, DYDX's bread and butter, is kind of what started popping off in volume, in attention, really. And this thing took off. Now, whether that's actual Chinese trading rotation into this or whether it's just people who think that's going to happen, I don't know. But you are getting higher highs on lower and lower volume. The next support down is at 21, and then below that, everything below 17, basically back to this range. The 200-day moving average is also at 20 to 21. So it's a bit of a scary buy up here. So as far as something that just got listed and is already showing a bear div on low time frames, and you'll know rather quickly because it's on the 30-minute. Sol, you could argue falling wedge potentially. The network hiccup is where all the volatility was here, but it's still above the 50. It's still above the cloud. It's still above the Kijun. What you don't want this to curl is into the 100 and lower level because you'll find support at 75 and then 50, 45. That's kind of it. There are micro supports on the way down, monthly pivots, the 200-day moving average, the cloud. So this is bullish, but it's not something I'd be looking to buy, especially how everything else looks right now. If I was trading this, I'd probably be watching it on a much lower time frame to just get super in tune with the trends, not on the daily, because you look at this, the daily is fine. It doesn't inspire me to buy anything here. If anything, when I see something that looks like this, I want a TK cross recross. So I want this to actually pretend to break down and then have another run before I touch it again. AVAX looks like a rising wedge to me. Coinbase announced a listing today. Maybe the interim top. Again, this looks bullish, but with this rising wedge, I'm not so sure that it would be a buy for me. Anything near 30 would be at the 200 at the VPVR level, but below the cloud. So again, a bit of a wishy-washy, not super clean. You kind of missed the move in my opinion if you're looking to get in all the way up here. Maker's one of the ones that has this bull div potential, just absolutely pummeled since September. It's getting a death cross on the daily. It's below the cloud. It's on its last legs of volume support here at 2K. You do not want to see this break 2K if you're bullish, and you want to see it above the cloud, above the 200 into October, November if you're bullish, which wouldn't be 3K. So 2K to 3K is a massive range, but until it's above or below either of those, above 3K, below 2K, it's kind of trendless on high time frames. It's held this level since February. It hasn't really gone anywhere. Comp, kind of a similar thing. It had this excellent potential breakout here set up for inverted head and shoulders, rising ascending triangle, Adam and Eve, whatever you want to call it. It was a bunch of things that never panned out. So 475 is the big resistance level. If that can get above 475, then I can get bullish again. But right now it's just ranging, choppy, bearish mess. Not a ton of volume support here. Lower. So into Q4, I'd be watching for that 400, 475 level. Does this thing go range bound for another 2 months into Q4 and then eventually move? I don't know. Will Gary Gensler come after their treasury component for 4%? USDC interest rates, something that Coinbase wanted to offer and the SEC said they'd sue them for it. Those are all interesting news events to watch for. Aave, in a similar boat, if they go after Comp, they're probably going to go after Aave, probably going to go after Maker. Any of these lending and borrowing protocols, if they declare them a security, if they say they need KYC AML, all this stuff's going to impact price extremely negatively in the short term. In the long term, it might be better for DeFi because then the real big guns can come in who trade legacy. That's depends what people want. Do they want something that's in the gray area or with, not a lot of volume and attention, or do they want something that's legitimate in the eyes of US law and brings a ton of volume, maybe not as decentralized? I can see arguments for both sides of that coin personally. But much like Comp, this thing needs to get above 360, 380. Potential bull div in the making, not a ton of support on the way down. Death cross pending below the cloud. None of these things are bullish. SNX, same story. Below the 200, below the cloud, already has a death cross. Some support at 5. The thing with SNX is because it's single collateral, and this thing starts breaking down, it's just relentless because it's essentially just a nonstop waterfall of people losing their collateralization over and over and over. Liquidations. So when this does turn bearish, it's usually pretty quick to the downside, not duration. Duration can be multiple months. It looks bearish to neutral right now, but you don't want to see this thing lose like 850. If it loses 850, it's probably headed to 5 or lower. Uni's done okay, much better than the lending and borrowing stuff. On the exchange DEX side of things, still has a bull cross at the 200 below the cloud. I'd like to see this thing above 25 and Q4 to get bullish again. It'll be above the cloud at that point in time. Right now, it's just neutral. It certainly looks better than a lot of stuff. Sushi looks worse to me than Uni, below the 200, below the cloud. Its support is at 8. I'd be watching for a bull div playing out eventually into Q4. It's a bit early, but it's starting to form on this last low. You didn't get as high of a bearish momentum on the RSI. It didn't make a lower low in a big way. So I'd watch for support with a spike into 8 at this monthly pivot, but you want this thing above 12 into Q4 to get bullish. Curve actually looks completely neutral to me at the point of control exactly since February, above the 200 in the cloud. You want this thing above 250 into Q4. And you can just, set levels. You don't need to actually use the cloud, but you can just set levels on all this stuff, set alerts, and just ignore it, until it does something. Enjoy your holidays in Q4, Thanksgiving, Christmas, or whatever you celebrate. Balancer looks more bearish than the other DEX stuff. It is looking like it's ready to retest this support level, but there is significant historical volume below that, which should act as support. So ideally bids down here with some like crazy spike into like 12, 13 would be the way to go. But it is below the cloud, below the 200. This needs to get all the way back up above 25 into Q4 to get bullish on that. BNT also bearish, below the 200, below the cloud. Needs to get above 4 into Q4 to be bullish again. Lots of support below 2, but that's a pretty far drop down percentage-wise from here, and it would represent a new multi-month low. ZRX also below the 200, below the cloud. You can see why I'm just a broken record about this. You can't be bullish. You can't expect higher highs. You can't expect crazy green days when we are below trend metrics like this. It's just, you can't, you can try to hope, but it just doesn't usually pan out for you. That's why you pay attention to trend in the first place. So there's some support at the previous lows here for ZRX, around 50 to 60, but this would need to get above $1 into Q4 in order to be bullish on it for me. And then at that point in time, it probably finds resistance between $1.40, $1.60. But that needs some time to figure itself out. 1 inch also below the 200, below the cloud. Needs to get above 3 into Q4 for me to get bullish on this again. The next support down is $1.24. If this low with like $1.50 doesn't hold, psychological support at 2 doesn't hold, the monthly pivot doesn't hold, right? There's some micro supports on the way down, but the obvious support is just retest the listing basically. and see what happens. Are there any buyers at that point in time? But that doesn't look great to me in its current form. Link is approaching its buy zone on the 1-year MA, which is the red line up here, green line down here. This is the MA, this is the multiplier. Historically, it's ping-ponged its way up and down here. I have the 200-day moving average on here as well with the pitchfork. So it's below the pitchfork, below the 200-day moving average, in the buy zone historically. Historically, it hasn't really spent a lot of time in the buy zone when it does get there. Could be a few weeks, could be a few days. But if this starts to curl lower, if this goes below 15, let's say, then it's probably lights out for this multi-year trend since 2019. And along with DYDX, the only other thing to me that looks somewhat decent is MLN, which is Enzyme Melon, the token for the platform that I trade on for Technic Capital. But this is above the 200, it's above the 50, it's above the cloud. It had an ascending triangle that actually played out, broke resistance to the upside. They just did a raise recently. I couldn't tell you exactly what the coin does. I have no idea. I just know that the technicals look pretty good, especially in the face of everything else. And this is a relatively smaller cap that is listed on Coinbase Kraken. Not investment advice, not telling you to buy it, but it's clearly different than everything else that I've shown. If this breaks this diagonal support at the 200, if this breaks 100 at this point in time, then this trend is definitely over. But this looks decent, at least compared to everything else. Lastly, I'll just mention the ETHBTC fund, a DeFi portfolio I trade for Technic Capital and Enzyme.Finance, a non-custodial portfolio management tool where you can send ETH/USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults and ways I'm collecting interest here, compound, Aave, as well as the trades in the trade tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.